I hope to give you a little overview of what the Perdisco practice set would be like. In the very first couple of pages of things you get when you go to the website, you get the information from May. You get the post-closing trial balance with the balances there. You can see that it does balance. They give you a schedule of accounts receivable, just a list of the people that owe you money and the balances for that. The schedule of accounts payable, again the same thing, and it gives you the terms on those guys. Inventory cards, which shows all the different things they have in inventory, and the transactions during May for those guys. You have the May bank reconciliation, which you'll need when you do your bank reconciliation. You'll start with the adjusted balance at the end of the month for May. You'll make sure that the deposits in transit and the checks outstanding cleared, and then work through June and see what's left. Here's your bank statement from June. That will give you all the information you need to finish the bank statement. And then you have the special journals, and this I want to go over those. The sales journal is only for sales on account, and you can see if something is if it's a cash sale, it'll say they sold it for cash, and if it said they sold it terms net 30, then you know that this is on account, or terms net 210 in 30 or something like that there's going to be sold on account. So this is what the sales journal does. It is going to debit accounts receivable. It is going to credit sales tax payable, credit sales revenue. It is also going to debit cost of goods sold and credit inventory. This one little block, this column here, is going to be two things. It's a debit to cost of goods sold and a credit to inventory. Every time you post anything in the accounts receivable column, you're going to need to update one of the subsidiary ledgers for accounts receivable, these guys. And you don't post to accounts receivable in the control account, this account here. You post to the subsidiary ledgers. You'll post to the control account in what's called a summary posting at the end of the month. Same thing for sales tax payable and sales revenue. Cost of goods sold, again, you don't post to the control account. And inventory, you're going to debit inventory. You're not going to post to that yet, but you are going to post to the inventory card. So if I buy something, I'm going to go to that inventory card. So in this case, it looked like this is in May. We purchased 17 plasma TVs for this price, or for this cost. And here was our new balance in plasma TV. So that gives us what the sales journal does. So you have to update the subsidiary ledgers, accounts receivable, and inventory cards every day, every time you make an entry. But the total amount you won't post to the general ledger. The purchases journal is simply for purchases of merchandise on account. Again, it'll tell you if it's cash or not. And so when you use this journal for purchases of merchandise on account, it's going to debit inventory and credit accounts payable. Again, you will have to update the subsidiary ledgers for accounts payable when you buy it and when you post it, and you'll also have to, or when you enter it in the journal. And then, sorry, I had to skip out my microphone for a second. But we'll have to update the inventory cards for the purchases. So we would do, again, we go to the inventory cards, and this would show the purchases. This would be a purchase, and of course when we sell, it would be the cost of goods sold over there. The cash receipts journal is anytime cash comes into the company. Let me make that a little smaller. We would there's going to be a debit to cash and a credit to one of these other accounts. Always sales revenue, sales tax payable, and accounts receivable. So if somebody pays on the account, it would be sales tax account credit to accounts receivable. If we have cash, then for a sale, it would be sales revenue and sales tax payable. And then we may have other accounts, and in fact, where we borrowed money for a loan, this would be other accounts, something that's not listed up here. It would also debit cost of goods sold if we have a sale, debit cost of goods sold, and credit inventory. Again, cost of goods sold you don't have to worry about on the general ledger. Sales, sales tax, accounts receivable, don't worry about those. But if it's in the other accounts column, we have to post that to the general ledger. Cost of goods sold, we're going to update. It'll be a debit to cost of goods sold, a credit to inventory. So the credit to inventory will be updated in the inventory cards. And if it's an accounts receivable, the subsidiary ledger would be updated too on the same day that you make the entry. Cash payments journal is anytime money goes out of the company. And again, we're going to have a credit to cash in this case, and a debit to other accounts. Accounts payable, update the subsidiary but not the general ledger. Merchandise inventory, if we've purchasing inventory, we would not update the general ledger. We would update the inventory card. Wages expense is another column here where we don't post anything and there's no subsidiary to post there. And if it's another other accounts here, then you would have to post to the general ledger that day. The general journal, you're not going to use that very often because the other journals will take care of most of those things. This is the subsidiary ledgers. I have the subsidiary ledgers. Let's see if I can make this a little bigger here. I can't seem to be doing that. There we go. I guess I'm done. Let's see what happens when I do this. Nope. This is I've got the accounts receivable subsidiary ledgers. Account receivable control is what that stands for, and the different people what they owe us, even if they don't owe us anything. And we have accounts payable. Accounts payable control in the subsidiaries. And you know, these are going to be debit balances or credit balances. This is going to be a debit balance, and this is going to be a credit balance. Simply, I know that because one is a receivable and one is a payable, and I need to update those numbers there. Inventory cards. They have the inventory cards to work with using the May 31st balance. If you look at the notebook computers, we had these were our balances in the inventory. Had two layers. Look at that last one, 29,280. So if I go to the old inventory cards and look at the notebook computers, you can see these two layers in here. This was at 29,280 and the 13,780. So that's just carried over to the new month. And there you go. That's kind of an overview of how things get posted, or how the special journals and the ledgers and stuff work in the Perdisco practice set. Please, the last thing I can say, read all the documentation, understand what each of the special journals does and how the posting works, and then just work your way through it slowly. I would save you get a feedback page every time you submit something, every time you submit a week's worth of work, or when I say a week's worth, the transactions for week 1, the transactions for week 2, the bank statement, reconciliation, etc. When you submit those things, make sure you save the feedback screen. I always print it as in Windows. You can save it to a PDF file. So I save it to a PDF file and understand where my errors were, so I don't make the same error going forward. And that'll help you a whole lot. Good luck.